As a business owner, you're likely paying more in taxes than you should. But what if I told you there's completely legal ways to reduce your tax bill and keep more of your money? Today, I'm breaking down 10 of the biggest tax write-offs for 2025 so you can keep more of what you've worked so hard for. Taxes are one of the biggest expenses for business owners, yet so many people miss out on key deductions simply because they don't know what's available. These deductions can save you thousands of dollars, but only if you utilize them correctly. And before we dive in, my name's Ryan Knoll. I'm a certified financial planner and founder of NAV Wealth Partners, a financial planning firm that helps clients nationwide make smart money decisions. Let's get started. So if you run your business from home, you might qualify for the home office deduction. This is one of the many commonly overlooked tax breaks, mainly because business owners feel it will trigger an audit. But here's the truth. If you use a dedicated space exclusively for work, you absolutely qualify for this deduction. There are two ways to calculate this deduction. The first is a simplified method, which allows you to deduct $5 per square foot of office space up to a maximum of 300 square feet. That's a $1,500 deduction right off the top, which is not a huge deduction, but it is better than nothing. The second method is the actual expense method, where you calculate a percentage of your home that's used for business and apply that to rent, utilities, and even property taxes. This should result in a much larger deduction than the simplified method. So if you own a 3,000 square foot home and 300 square feet of that are solely for your office, you can deduct 10% of expenses attributed to some common housing cost. Some examples are mortgage interest, property tax, homeowners insurance, and utilities. The key here, though, is exclusive use. If your workspace doubles as a playroom or a guest bedroom, it does not qualify. But if you have a dedicated space, don't leave this deduction on the table. The next deduction is the business vehicle expense deduction. If you use your car for business, you're eligible for vehicle deductions. There are two ways to calculate this. The standard mileage rate for 2025 is 70 cents per mile. So if you drive 10,000 miles for business this year, that's a $7,000 deduction. The other method is tracking actual expenses, which lets you write off gas, maintenance, insurance, lease payments, and even depreciation. The key to maximizing this deduction is keeping good records. I highly recommend using a mileage tracking app like QuickBooks. The IRS loves documentation, and having a solid record ensures you get the most out of this deduction. Now let's talk a little bit about equipment and technology. If you bought a new laptop, camera, or even a printer for work, you can write it off. And thanks to Section 179, you don't have to spread the entire deduction out over several years. You can deduct the entire cost in the same year you buy it. For example, if you spend $3,000 on a high-end laptop for work, that's a $3,000 deduction in 2025. This also applies to software, subscriptions, office furniture, and other essential tools for your business. Just make sure it's for business use and not personal use. Now, Section 179 is subject to certain phase-out thresholds and spending caps, so make sure you review how much you can deduct before going on a shopping spree, and this is something your financial planner or accountant can help you with. Now let's talk a little bit about business travel expenses. If you travel for work, you can deduct flights, hotels, rental cars, and even meals while you're on the road. The key here is making sure the trip is actually business related. That means attending a conference, meeting with clients, or any other legitimate work purpose. Now, if you mix business with personal travel, say you go to a 3-day conference and but say an extra 2 days with your wife and kids for a vacation, you can only deduct the expenses related to the business portion of the trip. Keep all receipts and document the business purpose of the trip to avoid issues if you're audited. This will save you a big headache if the IRS comes knocking at your door. Also, be sure to know what is not deductible. Certain expenses such as personal activities, costs for family and friends traveling with you, and luxury upgrades from that coach ticket to first class you bought won't net you any extra savings. Now, before we go on, I just want to say thank you so much for watching today. And if you would be kind enough to subscribe and hit that like button if you're finding this content valuable, I'd really appreciate this as we continue to grow out the channel. Thanks. Let's get back to talking about some of the deductions you can take for this year. We're going to talk a little bit about marketing and advertising now. Any money that you spend on promoting your business is 100% deductible. That includes social media ads, Google ads, website costs, branding, even printing business cards. If you're working with an influencer or running paid promotions, those are also write-offs too. Think of it this way. If you invest $10,000 into marketing this year, that's $10,000 directly reducing your taxable income. This is one of the best ways to not only grow your business, but also lower your tax burden at the same time. And also a quick note here is that even if this is a deductible expense, as a business owner, you should consider this an investment in your business. In fact, knowing your marketing metrics is a great way to predict revenue for your business. If you invest, say, $10,000 per month into marketing, and you know that this is going to give you a 1.2x return on ad spend or $12,000 in revenue each month, this can help you plan from not just a tax perspective, but also from a business growth and cash flow perspective, which I would argue is more important. So make sure you are keeping track of the marketing budget from a tax deduction perspective, but you also want to make sure, how does this affect my business in the long run? If your marketing is really, really good, this should help amplify the growth of your business down the road. Are you utilizing professional services in your business? If you're paying an accountant, bookkeeper, business coach, or attorney, those expenses are tax deductible. These professionals help run your business more efficiently, and the IRS recognizes that and allows you to pass through what you're paying them as a deduction to your taxable income each year. Even hiring a consultant to improve your marketing strategy or streamline your operations is deductible. Just keep records of the invoices and the purpose behind paying these people, and the payments will be tax deductible come tax time. Most jobs have some education or continuing education or training component to them, and any courses, workshops, or certifications that improve your business skills are deductible. This includes industry conferences, online courses, and even books related to your field. If you're investing in education to grow your business, you're not just improving your knowledge, you're also reducing your taxable income. A large expense that catches some self-employed people by surprise is health insurance premiums. If you're self-employed and you pay your own health insurance, you may be able to deduct 100% of the premiums. This applies to health, dental, and vision insurance as long as you're not covered by another employer-sponsored plan. There is some criteria you must meet to be able to take this expense as a deduction. You must have a profitable business, you have no other means of coverage even from a spouse's plan, and pay for the insurance yourself, not directly through your business account. If you meet this criteria, this expense is 100% deductible for yourself, your spouse, and any dependents you have on that plan. One of the largest deductions that I can help a self-employed business owner take is utilizing retirement plans efficiently. One of the best ways to save taxes and build wealth is through retirement contributions. If you contribute to a SEP IRA, solo 401k, or simple IRA, those contributions are tax deductible. For 2025, you can contribute up to $70,000 to a SEP IRA if you qualify. This is a massive deduction that also secures your financial future. And if you're contemplating which retirement plan might be best for your business, I encourage you to go back and watch my video that breaks down simple IRAs, SEP IRAs, and solo 401ks to help you decide what might be the best fit for your business. The last deduction we're going to talk about today is meals and entertainment. Business meals are 50% deductible when you're taking clients, partners, or employees out to eat. But entertainment expenses like sporting events or concerts are not deductible under current IRS rules. The best way to protect this deduction is to document it properly. Always keep receipts and jot down who you met with and why. A simple note on the receipt can go a long way in case of an audit. So there you have it. Those are the 10 biggest tax write-offs for business owners in 2025. If you found this video helpful, hit that like button and subscribe for more financial tips. If you're a high-income earner and want a personalized plan tailored to your financial goals, book a free consultation call with me at the link below. Let's build a tax-efficient strategy that works best for you. Thank you so much for watching, and I'll see you in the next video.